So, what is going on in the banking industry? And what's going on with inflation? And what's the Fed going to do about it? And what should I be doing about it? Hi, this is Jamie French, and just wanted to give you a brief market update based on the events of this past week. The big news coming out of this past week was the failure of Silicon Valley Bank, which represents the second largest bank failure ever. And that was followed by the failure of Signature Bank in New York, which would represent the third largest bank failure ever. Both of those coming just behind the failure of Washington Mutual back in what year, would you guess? 2008. The markets obviously reacted negatively. It created a lot of fear, particularly in the financial services sector and in the technology sector. And so, we've given back a lot of the gains that we experienced earlier this year in the stock market. And so the roller coaster continues. So what happened with this, with Silicon Valley and in the banking industry? Was this an isolated case or is this an industry-wide problem? So let's talk a little bit about that. Silicon Valley Bank catered to technology-centric customers, startups, venture capitalists. And so they've grown very rapidly over the last several years. And as those deposits have increased, they took those deposits, invested them in long-term bonds. And with the Fed raising interest rates aggressively over the last several months, that has reduced the value of those bonds. They had to sell a number of those bonds, reported a huge tax loss. And when that was disclosed, it created fear amongst shareholders and it created fear amongst the depositors of the bank. And so the share price started to plummet. People got fearful, started to take their money out. A lot of their clients had well over the FDIC insured limit. And so when things get dicey, they're more apt to get their money out. So there was in essence a run on the bank, and the bank didn't have the liquid reserves to give people their money. And that's why it failed, and the government had to step in. So is this a systemic problem? Well, I think largely the banking industry is sufficiently capitalized. This was really a case of A, the clientele that bank was serving, and B, the investment approach that they took, which came back to bite them. So that was the big news out of last week. I'm recording this on a Tuesday. This morning, inflation data came out. And it, in essence, came out as expected. Year-over-year inflation was down for the 8th month in a row, but it's still coming down slowly. And so when we think about what's the Fed going to do next week with interest rates, well, the challenge is on the one hand, they want to continue to raise rates to stave off this inflation and continue to reduce it. On the other hand, the aggressive raising of their rates has caused some of these issues in the banking industry. And so Chairman Powell had previously indicated that a 0.5% rate hike may be likely this time around. It remains to be seen whether they're going to pull back from that a little bit. So we'll see next week and report on that. So you may be asking yourself, what do I do about all this? Should I be more conservative and take advantage of the higher interest rate environment? Should I be taking money out of the stock market given the volatility and the uncertainty? Should I be buying into the stock market? Should I be looking at this as an opportunity to buy while the market is low? And what do I do about the bond market? And what other adjustments should I be making in my portfolio? If these are the questions that you're asking, I encourage you to give us a call. We can take a look to make sure your long-term investment strategy is sound, while also making sure that you're making any short-term adjustments that are needed. We'd be happy to help you with that. If these are the questions you're asking, give us a call. Thanks for listening today. Hope it was helpful.